I am always on the lookout for a good quality business that can provide long-term capital growth and income growth. It's a powerful combination that can grow wealth very pleasingly over the years. One business that I think really fits this description well is Rural Funds Group, ASX, RFF, which is my favorite real estate investment trust REIT. It owns farmland and leases it out. Here are 4 reasons why I like it. Diversification. One of the best things about Rural Funds is how diversified its farmland portfolio is. It has 38 properties spread across 6 different agricultural sectors. I am always on the lookout for a good quality business that can provide long-term capital growth and income growth. It's a powerful combination that can grow wealth very pleasingly over the years. One business that I think really fits this description well is Rural Funds Group, ASX, RFF, which is my favorite real estate investment trust REIT. It owns farmland and leases it out. Here are 4 reasons why I like it. Diversification. One of the best things about Rural Funds is how diversified its farmland portfolio is. It has 38 properties spread across 6 different agricultural sectors, which includes almonds, poultry, cotton, macadamias, cattle and vineyards. These properties are spread across different states and different climatic conditions, which improves the risk factor. If there's a storm or drought, it's a lot less likely to affect many of the farms. Weighted average lease expiry (WALE). Rural Funds has one of the longest weighted average lease expiry (WALE) numbers of the whole REIT industry. At the end of the 31st of December 2017, its WALE was 12.5 years, which provides excellent long-term certainty for shareholders and the REIT. The tenants are high quality too, with a lot of them being listed entities in Australia or overseas such as Select Harvests Limited, ASX, SHV, and Treasury Wine Estates Limited, ASX, TWE. Acquisition. It has spread into more agricultural sectors. This improves the diversification and is accretive for each shareholder. A key reason why Rural Funds interests me is that it aims for a payout ratio of only 80%. Most other REITs pay out a lot more than this. It reinvests the retained money into improving the productivity of its farms so the rental value and capital value increases. Income growth. Rental indexation is built into all of its contracts with its tenants. The mechanism for the increase is either linked to a 2.5% increase or CPI related. The indexation, combined with the other positive reasons I've written about above, allows Rural Funds management to confidently target an annual distribution increase by 4% per annum for the foreseeable future. Risks. Rural Funds does carry a decent amount of debt. Gearing was 37.4% at the end of December 2017. Debt is expected with the REIT, but debt can be crippling if there's too much, particularly if interest rates are rising. However, the interest rate on its debt is currently only 4.2%. Interest rate rises will increase the interest expense for Rural Funds and could also lead to the assets being worth less. I mentioned diversification is a good thing for the spread of farms, but increasing storm numbers and the strength of them could hurt Rural Funds' farm values. However, it's the tenant that has the operational risk. Foolish takeaway. Rural Funds is currently trading at a 35% premium to the adjusted net tangible assets (NTA) per security at the 31st of December 2017. This is pretty expensive and I have held off buying more shares recently because of the high premium. If Rural Funds dropped to $2 or below, I'd be interested in buying more, but not definitely. It would boost the current yield of 4.6% to around 5% or more. But until Rural Funds is cheaper, I'd rather buy shares of this top dividend share for income and capital growth. Here is the top dividend stock idea for June. Financial year 2018 is here and the Motley Fool's dividend detective Andrew Page has revealed his must-buy dividend share to grow your wealth in 2018. You might not know this market leader's name, but it's rapidly expanding into a highly profitable niche market here in Australia. Even better, the shares boast a strong, fully franked dividend that should balloon in the years to come. In other words, we're looking at the holy grail of incredible long-term growth potential and income you can watch accruing in your account in real time. Simply click here to grab your free copy of this up-to-the-minute research report on our Motley Fool contributor. Tristan Harrison owns shares of RURALF UNDS stapled. The Motley Fool Australia owns shares of and has recommended RURALF UNDS stapled. The Motley Fool Australia has recommended Treasury Wine Estates Limited. We fools may not all hold the same opinions, but we all believe that considering a diverse range of insights makes us better investors. The Motley Fool has a disclosure policy. This article contains general investment advice only, under AFSL 400,691. Authorized by Scott Phillips.